Hello everyone, I'm David Darst. We hope you've had a good start to the year thus far. I'm here to give you a little bit of a review of the month of January. Over the last 4 weeks, you basically started the month with the December jobs report, where you had gained 223,000 jobs in the month of December. And when you put all 12 months together, the U.S. economy added 4.7 million jobs last year. That's amazing, although the year before, that's the post-pandemic year, 2021, it added 6.7 million jobs. So 4.7, 6.7 is 11.4 million jobs. However, we lost approximately that much in 2020 during the pandemic crisis. The first week of the month, the S&P rose 1.5%, NASDAQ rose 1%, and the two-year Treasury closed the first week at 4.24% yield, and the 10-year at 3.55, and the 30-year at 3.67. All of them were down considerably. You had money come rushing into stocks and rushing into bonds in the first couple of weeks, actually this month. Why? First of all, there was some short covering. People had been short bonds, short stocks going into the end of the year, and they made a lot of money since stocks went down and bonds went up in yield, meaning down in price last year. The second reason is a lot of money gets coming into the pension funds, the individual retirement accounts, and the 401k retirement accounts of individuals, and they take that money and they start to put it to work in stocks and bonds. So that's another thing that was driving yields down and stock prices up. It means a good start to the year. Now, the second week was basically the beginning of the earnings reporting season. JP Morgan, Wells Fargo, Bank of America, Goldman Sachs, Morgan Stanley, all of the big financial houses. And I would say they reported decent results, but there was somewhat of a warning tone to many of the chief executive officers' messages. Jamie Dimon, Brian Moynihan, Jamie Dimon of JP Morgan, Brian Moynihan of Bank of America. They were basically saying we could easily have a recession. They did not say it would be a very harsh recession, but somewhat of a recessionary set of characteristics. And they were building up some loan loss reserves in many of these banks to guard, to protect if they needed to write off the value of some of their loans later on. We'll see. That week, by the way, the S&P rose 2.7%. So, and the NASDAQ had a big week. All of your growth stocks, your Apples, your Amazons, your Microsofts, your Googles, okay, your Meta, Facebooks, all of them had a very strong week, and they've had a strong month, as a matter of fact. And NASDAQ, that second week of the month, was up 4.8%. The third week was basically consumed and dedicated to the debt limit talks. You have this $31.4 trillion debt limit. There's a lot of brinksmanship being played by both parties and by the administration. It took 15 tries to get Kevin McCarthy voted in as the Speaker of the House of Representatives, but now, and he and President Biden were both threatening not even to sit down and negotiate with one another, although that does, as the month ending here, it does seem like they will be meeting soon. So that's a good point. But this is not good for the currency. This is not good for the international standing of the United States, much less the tone of confidence on the part of consumers, investors, and corporations when you have politicians acting like this. Google announced in the third week that they're going to lay off 12,000 workers. Amazon, 18,000 workers, and Microsoft, 10,000 workers. Now, look, the technology industry only employs about 5 million workers total. And the total employment in the United States is 130 million, something like that. So these few thousand, however, they have a very, very high impact psychologically. Everybody knows Google. Everybody knows Microsoft. Everybody knows Apple. Okay, everybody knows Amazon. Everybody. And when you hear that some of these are laying off or considering laying off, I personally don't believe that's the end of the layoffs. But this This was the theme of the third week, and as you might imagine, the Standard & Poor's declined by 0.7%, and NASDAQ still managed to eke out a small gain of 0.6%. Now, the fourth week was all about getting ready for the Fed's meeting on February the 1st, okay? It's a two-day meeting, January 31st, February 1st. The Fed's meeting, a lot of people talking about a 25 basis point increase. That's what's baked into futures prices. And people were very focused on what they call the Personal Consumption Expenditures Index. This is prices of all the goods and services in the economy. It's not just the things that are in the Consumer Price Index or just the things that are in the Producer Price Index. It's everything, and this is the Personal Consumption Expenditures Index. Now, the Fed's preferred measure is the core version. So you're taking out food and you're taking out energy. And in September, that was 5.2% up year over year. October, 5.0. November, 4.7, and December, 4.4. So people are really beginning to think, oh my gosh, this is getting close to the time when the Fed can say we're going to pause, and we maybe we're going to start thinking about when do we take interest rates down. The two-year Treasury, remember it started out this month at 4.24. It closed the week at 4.19. That's down 5 basis points. 3.82. Was the number for the 10-year. That's down 3 basis points. And the 30-year, 3.64, down 3 basis points from the end of the first week. So yields went down a lot in the first week. And then for the second, third, and fourth week of the month of January, they went down just a little bit. The S&P 500 closed at 4070 late last week. It is up 6% for the year. I would point out that the low point, the low point of the last 12 months was reached on October the 12th, and that was 3577. So it's up 13.8% from the middle of October. Now, the high point, and this, by the way, was not a cyclical high. It was an all-time record high. Do you remember when that was? The all-time record high for the S&P 500 was reached January 3rd. That's last year, January 3rd, 2022, and it reached 4797. We would be very, very, very surprised to see the S&P get anywhere near that this year. We're basically looking for a range, maybe 3,600 to 4,100, 4,200. That's where we are. Volatility remains very constrained right now, meaning very low. There's very little concern, very little worry, very little anxiety in the markets right now. 18.81 is the volatility. And the last 3 weeks, it's been below 20. The last 3 weeks of January, below 20. And the first week of January, it was only 21. So not much there. The number one performing stock in the S&P 500 is Warner Brothers Discovery. Can you believe that? That was sort of an orphan. It was a spinoff. It was left for dead. It's up 57% thus far this year. Last year, you recall, it was down 63%. Guess what number two is? Number two performing stock this year, Tesla. Tesla's up 44%. It was up 33% in the last week of this month, 33% in the last week of January, 44% total for the month of January. But last year, you recall, it was down 65%. And you have companies like Carnival Cruise Lines up 37%, Disney up 26%. There's been a big rally here in the month of January. Microsoft announced earnings. They were not all that, they were not bad, but not all that good on the guidance. They basically are seeing some weakness in their cloud services platform, the Azure, which does compete with Amazon Web Services, of course, and Google's Web Services cloud business. The Bank of Canada raised interest rates another 25 basis points, and they announced they're going to pause in their interest rate increases. And that is interesting to me because they were the first of the major central banks that started to raise interest rates. You remember we raised interest rates many times last year, 7 times as a matter of fact, and we think that was all basically coincidentally, it was following Canada. So here you have Canada pausing. Does that mean we're coming up to a pause soon or not? The Fourth quarter GDP came in. First quarter was down 1.6%. Second quarter down 0.6%. Third quarter up 3.2%. Fourth quarter up 2.9%. That's the first estimate. Don't forget, there will be 3 estimates. That's the first estimate of the fourth quarter numbers. It's very, very hard for me to see the Federal Reserve pausing right now when you have jobless claims below 200,000 per week. They came in at 186,000 for the week ending January 1st. We wish everyone a very wonderful continuation of this year and look forward to catching up with you very soon.